Welcome to the Reimagine podcast. Each week, give yourself 30 minutes and meet the people working hard to create the future of insurance today.
Hi, this is Paul Tyler with another episode of the Reimagine podcast. Laura, great to see you again.
It's great to be back, Paul.
It is, and we're just coming out of the July 4th holiday weekend. I was out west. It was blisteringly hot, and now back to the East Coast where we've got some major thunderstorms. So hopefully we don't lose power in the middle of the show on anyone's parts. But if we do, we'll just keep moving. Laura, tell us. We've got a very interesting guest who is a founder of a very interesting company. Can you do the introductions?
Sure. So we are joined here today by Eugeny Prudchyenko, CEO and co-founder of EvoShare, and it's a really interesting company that when it came across some research that we were doing with NASA Reimagine, we wanted to learn more. So when we reached out to Eugeny and he agreed to be on the podcast with us today, it's an exciting opportunity for us to, I think, dive in and get a sense of what the company does. So with that, please introduce yourself, Eugenie, let people know about EvoShare, the work that you do, and a little bit more.
Yeah, thanks, Laura. Thanks for having me. My name is Eugeny Prudchyenko, and yes, I'm the one who came up with this crazy idea of putting third-party contributions into strictly regulated defined contribution plans, retirement plans. It's a 401k, 403b, and other financial vehicles. So the idea of EvoShare actually transformed a couple of years ago. The initial idea was similar to what Amazon Smile does. So 6 years ago, my co-founder Dan and me landed in San Francisco, and we brought to the United States a completely different idea. It was a marketing tool for brick and mortar businesses, for moms and pop shops. And if you would use us, you would buy something at this locations, and then portion of what you just spent would go to charity of your choice. So we were doing something that Amazon was doing online. We were doing it with physical locations.
It's the Amazon Smiles program,
Amazon
right?
Smile, yeah. So surprisingly, we failed to compete with Amazon. So we couldn't find any traction, any investment. We were funding this company ourselves with what we left with when we came from EvoShare, from Ukraine. So it was pretty hard time, and I thought that, well, that's the end. So I took my wife and my kids to Lake Tahoe just to, wash my brains, and I saw Prudential billboard saying, the best donation is donation to your retirement. And I thought to myself, what if instead of channeling money to charities, we would do this for 401k plan? And that's how the idea was born. And then I called my attorney, say, hey, can we put cashback commission miles into 401k plan? I said, well, that is a great idea. How about you pay me some money and I'm going to think about it. So I did. And in a week or two, he returned to us with a bad news. He said that no third-party contributions allowed for 401k plan. Only employer or employee can contribute to the plan. So I was a little bit upset. Well, I was very upset, and spent sleepless night. And in the morning, I came up with an idea that I consulted with my co-founder Dan, and we came up with the process of how to do this. And when we described the process, our attorney charged us again, but this time it was really worth it. And yeah, he gave us our first opinion letter that we can put through this process, through payroll deduction process, we can do this. So we became a 401k benefit for employers, and we serve more than 80 companies right now in this space, but we found more traction if we use other destinations. Not as complicated, or they perceived as a simpler thing than 401k plan. So this is what we do. We channel cashback from people daily purchases at more than 10,000 businesses now in the United States, 700,000 hotels, online and offline. We channel it to financial vehicles, so we force people to save.
So I can't help but ask you on with my annuity product design hat on here. So if I spend my after-tax dollars and you're giving me money back in that's already been taxed once, is it taxed on the way out when I pull the money out of my 401k?
Well, that's a good thing. Good question. Yeah, that is a complicated question. I'm not sure if
I'm sure it is.
Well, let me give you an example of what will happen if you contribute, if you use EvoShare for your 401k plan, right? So let's say you joined EvoShare through your employer, then you saved $100 for the sake of simplicity. At the end of the quarter, we will send this $100 to your checking account, not to your 401k plan, to your checking account, and this is non-taxable event. According to IRS, rebates are non-taxed. You already paid taxes, right? So this is non-taxable event. Simultaneously, we will inform your employer to withdraw $100 from your upcoming paycheck in addition to your regular contributions.
Okay.
So it's gonna be a wash if you contribute to Roth IRA post-tax.
Okay.
But if you contribute to traditional IRA, not IRA, I mean 401k or IRA, it doesn't matter. As 90% of people do.
That's brilliant. What you've done is that's so smart.
You will pay less taxes from your upcoming, because your adjusted gross income is going to be lower, so you will pay less taxes. So it's net positive.
So can I buy a house? Get a rebate?
Well, we're working on this. Actually, it's interesting question as well, because if you would put your house on your credit card or debit card that is linked to our platform, you may get cashback on this as well. And this cashback is going to be applied to whatever destination you might choose.
Oh, this is interesting. This is fascinating what you've done.
Thank you.
So, I'm curious. Like, who are the leading adopters of this? The company, the types of companies, or at least the types of HR departments, and tell us about the employees who are taking advantage of the program.
Yeah, I'm going to be a little bit long-winded here. You are asking great questions. So initially we started as 401k benefit, and there are a couple of reasons why. So first is that we have this proprietary process that we can defend as a company of how to put this. It's really simple, but the mechanics behind it not as simple as I just described. So it's a roadblock for other companies to penetrate the market. The other reason, which is the major one, 401k industry was the only industry that responded to our requests. We were knocking all the doors that we could knock, put our hands on, and I remember we bought a list of 100 top financial advisors in the United States. I mean, their contact information, and we sent 100 emails, and just one person got back to us And he called immediately. He said, well, guys, you have 15 minutes to explain how in the world you are doing this. So we spent more than an hour, and now he's an investor and a member of my board of directors. So it seems we convinced them. But back to your question, yes, we were trying to sell it through financial advisors, and we were talking to HR departments and benefit departments of companies that has more than 100 people, 100 employees. But as I said, everything was tied to 401k plan perceived as very complex thing. So we've learned that we need to spend a lot of time to convince on average 11 people at every company: financial advisor, record keeper, benefit department, HR guy, CEO, CFO, 11 people on average. So it became obvious that it's not scalable. And one second-tier record keeper approached us and they said, well, we don't want to do this for 401k plan. We have a problem, Eugenie. And the problem is asset attrition. If people change jobs, and people do change jobs, they take their money with them, and we lose probably 10, $15 billion because people change jobs. So what we want to do, we want to create a sidecar IRA and offer to our participants, 401k participants, while they're still with us. So when they leave, they have an IRA account to roll over their 401k plan. And that made me think that, okay, if these guys, I perceive them, I see them as a FinTech organization. If these guys want to do this, so how about other FinTechs? We approached 20 companies, and now we contracted with 12 or 13 from this, and EvoShare now offer its infrastructure to any company with a financial product. So if you're a 529 provider, which is a college fund, if you sell college funds, we can be attached to this. If you'd like to offer emergency saving accounts, we can be attached to this. We can help people to repay student loans, contribute to HSA, FSA, brokerage accounts. Now we're gonna open soon other destinations such as cryptocurrency and annuities, insurance products such as whole life, and of course mortgages. We will be helping people to pay down their mortgages faster.
So to make sure I'm understanding this correctly, in theory, say I go to Nordstrom and I make a purchase, and I go to other places within the month, and I buy groceries, I pay my bills, I do all of these things. In theory, if those organizations or those companies are partnered in this way, I'd be able to get dollars back that in theory that I could use to put into my 401k. Is that correct?
Yes, that is correct.
That's really interesting. The challenge we've had on annuities is doing sort of like low, small deposits has just been sort of the cost of the machinery. Where we're set up to take big checks. We're not set up to take small checks or payments over time. Do you have any, what's your best customer success story to date? Paying off, have they paid off loans? Have they, or is this really sort of in the early stages, and this is something you'll be able to talk about, 3 to 5 years from now?
Well, we position EvoShare not as B2C, although we just launched B2C program, and anyone can join EvoShare for a small fee, monthly fee. We position EvoShare as a pipeline that connects retail and financial industry, and we can transport miles from your airline company, or just cashback from Walmart or Target or Groupon that you buy day in and day out. We are not using interchange fee right now. So that the fee merchants pay to card networks and banks and card issuers to for the transaction. So if you have your mileage points, you will keep your mileage points. EvoShare is going to be on top of it, so you will not lose it. But at certain moment we will be doing this as well. So to describe our best use case is well, all our partners are happy with us, and we help them engage with their participants every day, because our platform can be co-branded. So can you imagine this? Let me give you an example. We have browser extension. If you download this browser extension, you log in into your account, then it sits on your browser. When you do your search, Google search, we will highlight, our browser extension will highlight companies that work with us. So it's more than 2 million searches that you will see EvoShare brand in front of you on the first, second, third, whatever page of Google. So basically we ride on marketing budgets of Walmart and Best Buy and Groupons, but we can let our partners to do this. We brand these highlights with our partner brand, and now they are not only their 529 or student loan provider, they also helping people every day, looking for money for them. And it's going to be like Paul gives you 5% cash back. It's a huge psychological thing. Again, it's not a discount. Discount is very different from cashback in terms of how our brains react to this, right? Discount is a good thing, but no one is going to be excited about 1% discount or 2% discount. However, we all are okay with 2% cash back. This is the most what credit card gives. It triggers this super intense dopamine reaction in your brain, and it's very addictive. Your brain wants to repeat it. Why? Because we're humans. And who did this? Paul did this. I want to approach Paul now, or Laura.
Okay, Eugenie, this sounds too good to be true. Who pays for it?
Good question. Good question. In most cases, merchants pay for it. We keep a small portion of the commission. I'd say, not always. In some cases, we even lose money if we track, for example, a very small transaction, $5, $3. We pay more for tracking the transaction than we get in return. But we make Visa, MasterCard, and American Express richer by paying this tracking fees. But in most cases, it could be paid by employer, it could be paid by merchant, it could be paid by financial organization that we work with. So what I'd like to say that in most cases, in 99% of cases, it's paid by not you as user.
I like that.
Yeah, of course.
Yeah, right, especially as a user. So in sticking with the behavioral finance aspect of it, have you seen a change in people's behavior over the last 16 months? Obviously, we've been through a lot with the pandemic and spending habits, and I would think that their data shows an increase in online sales and online purchasing. I know myself included, I was buying groceries online. I was doing everything that I could online, especially in the early phases of it. Have you seen behaviors change in the last 16 months?
Yeah, of course, we registered increase in online purchases, but the most behavioral change we saw when we spoke with our partners, and our partner financial organizations, and they mostly were retirement-oriented financial organizations, and they were very disappointed with COVID and what people did to overcome this situation. And specifically, they saw huge attrition of assets under the management. The government led people to withdraw up to $100,000 and with one record keeper without penalties. You have to return them in 2 years, I think so, or pay taxes. I'm not sure how it's gonna work, but with one record keeper, the data shows that on average, let me remind you, it was $100,000 max. On average, one participant from their plans took $100,000.
Wow.
So everyone took maximum allowed amount, and they lost a lot of money. So now they are trying to come up with a solution for the future crises. It's not the last one. COVID showed that people aren't prepared for any emergencies. Data shows that, that 40% of United States population can't afford $400 or $500. I don't remember. Emergency event. So now
So how much of a hole can you help people fill? Like if I were to spend, 100% of my disposable income on an average, American, and with merchants that gave me cash back, how much money would that mean for my, an average person's 401k over the course of the year?
It's 8%. You can count on 8% cashback.
Cashback 8%. So that's a big number. That could it sounds like it could be the equivalent of at least a few months worth of contributions, normal contributions to a 401k.
And, I agree with you, but this is not the only thing we do. The big chunk of funds or money that we deliver to financial industry comes from your own pocket. We have a feature we call daily savings. We don't do what Acorns does. You know this company, Acorns. Yeah, they rounding up. We do it in a different way. I'd say we do it in honest way, so people can understand and calculate how much they're gonna contribute. We offer people to save from 25 cents to $3 a day. And when they choose the amount, then we just pull this money from their checking accounts in $10 increments, and that's how we create another stream of money that people save, not only through spending but also through direct saving. And this channel responsible for almost a half of money that people saved with us.
So looking ahead, let's say 3 years, what's a goal that you have for your company? Where do you see yourself in the best case scenario?
Well, we're already in the best case scenario. That is for sure. Large organizations, first tier record keepers and financial, I would say, monsters. Or, I don't know. I can't choose the right word without offending them. Preliminary. But we see great interest. The reason is that retirement system is based on earnings right now. Everything that you could contribute comes from your earnings. EvoShare is building parallel retirement / wealth building system based on spending. So it's a completely new source of money that could be saved. And the only thing EvoShare doesn't do is we do not let our users to cash out and use this just as a cashback, because cashback it's the most, from behavioral economics perspective, it's the most enticing thing that encourages spending. It's a habit loop. Purchase is a trigger, cashback is a reward. Your brain wants to repeat it, and they will find a way. But it's not saving. You have just 10% more to spend. We force people to save.
So, Eugeny, tell us, why would you do this? Why would you do a startup like this? What keeps you motivated? Okay, on some of the harder days. Sounds like a lot of success now. I know there's a lot of work that goes into getting. It sounds like the clients you have at this point.
Yeah, that's true. As you can imagine, it's not easy to convince big company to work with a startup. So we spent 6 years, and we just starting to grow. But all the 6 years, we were having a lot of fun. Fundraising, it's a fun, and I have gray hair, a lot of gray hair. I lost half of it by doing this. You can feel the pain, Paul, right?
Yes.
Right, and the most motivating factor to me is I just hate to fail. Never failed before. I was in charge of the largest microloan provider in the ex-Soviet Union area, and it was not my first business. I like to succeed. My co-founder likes to succeed, and also we have a great team of people that joined company over the course of this 6 years. I just can't fail. Yeah, I just can't let them down. It's not gonna happen.
Yeah, teamwork's definitely something that's important, especially in the entrepreneurial sphere. Is, on days where it's good, it's great, and on days where it's bad, we definitely need one another to get through. I think it's a safe way to put it. So, speaking of, what's a good way for people to reach out to you and to learn more about your company and the work that you're doing?
Well, please feel free to visit evoshare.com, and yeah, we have a contact form if you'd like to reach out to us and partner with us. Feel free to fill out this form, and yeah, we will reach out and we will sign a contract.
Well, excellent. Listen, thanks so much for your time. I think you're tackling a really important problem. Far too few Americans have saved as much as they need for retirement. A lot of people unfortunately don't even have 401ks. Hopefully this motivates them as well to get them and start to fund them. So, listen, thanks for all the work you're doing, and thank you for the time today.
Thank you guys. Thanks for having me.
Great. Laura, thank you. And for all of you listeners, join us again next week for another episode of the Reimagine Podcast. We want to especially thank today's sponsors, Launch and Symetra.
Thanks for listening. If you enjoyed the show, please rate and recommend us on iTunes, Stitcher, Overcast, or wherever you get your podcasts. You can also get more great information about this company and other great startups at imagine.nfg.com.